Good afternoon, everybody. Welcome to Selecting an Option Strategy. I'm Connie Hill. We get together every week at this time and discuss what do we see in the market? What do we see as far as possible strategies? Today, we're going to talk about a couple things that we'll really focus on. Number one is maybe 3 questions to ask yourself before you decide a strategy and a stock to work with. Okay, so we're going to talk about 3 key questions. And we're also going to spend a little bit of time on managing a couple of our trades. We have 3 active iron condors out there. One of them, some people might be starting to have some questions about. So we're going to spend a little bit of time looking at those trades as well. Now, I hope you're following us on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat. He's here to help me field some questions. I'll keep an eye on the chat, but if there's things I can't quite get to, something else Cameron can help out with, he'll do that for us. You want to follow him on X. He is Cameron May CS. We'll post educational content, things we're noticing about different charts, or maybe things we're looking for a particular breakout or bounce or whatever we might be discussing that we think you might find interesting. So make sure to follow along. Let's go through our disclosures and we will get into our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and information. Don't consider it a recommendation. We will be using the Paper Money software application. It's for educational purposes only. It's a fantastic tool, especially as you're working and trying to get down certain strategies. Past performance of any security or strategy does not guarantee future results or success. There is no guarantee that the execution of a stop order will be at or near the activation price. All right, want to give you a little word on our workshops that are coming up here. If I could give you a little nudge, I would do so, okay? If you can get to, or you're in the Dallas or Southern Texas area, actually Northern Texas area, I guess, the Dallas Market Drive event. 2 weeks later, we're going to be in Chicago. That's going to be a Saturday event as well. And then Orlando is going to be a workshop, technical analysis on the first day and option strategies on the second day. On that one, you can register for one or the other or both. Okay, they will just follow one right after the other. So if you can get to any of these places, Cameron and I would give you a little prodding and say, hey, take some time to go. You'll thank yourself. You'll thank your future self for taking some time to do that today. All right, typically we want to just do a quick evaluation of the markets. I don't want to spend a ton of time there because I think you guys are, for the most part, kind of keeping up on what goes on in the market, and we mention it here and there in some of our webcasts. Then we'll talk about what strategies we might consider with the current market conditions. Always going to look at a lot of examples. I've got several example trades set up for us to take a look at today, as well as I mentioned, reviewing not only our 3 iron condors, but also one of our calendars that we were able to wrap up this last week. So we'll talk about that, see how it goes. So let's head over to Thinkorswim first. And on my SPX, I've got a blue 10-period moving average. I've got a red 30-period moving average, and they're just daily charts right now. Then I have a couple of oscillators that we're going to consult, okay? RSI, we've talked about in depth as using it as far as, we have overbought or oversold conditions. And one of the things that RSI is really helpful with is identifying divergences. Now, divergence means that if the price is going higher and higher, we would like to see the peaks on the RSI get higher and higher as well. Or if we were using a MACD or stochastic, whatever tool we might be using there. In this case, the RSI is having lower peaks and lower peaks. So we're seeing kind of this idea that we were seeing a divergence develop, but it has to be confirmed by price. So we identified these divergences here. You can see these white lines where I've connected the lower peaks to the lower tops. And I'm going to go in here right now again on this new peak in the price. It went up higher. In fact, it hit that on Friday. It hit another all-time high. But the RSI didn't go higher again. So again, another divergence could be developing here. So we'll wait for it to confirm by price. all right? It's more of a yellow flag saying, hey, things might be changing. It doesn't mean they absolutely are changing or they're guaranteed to change. Doesn't mean that at all. The ADX, will consult it a little bit here today as well. This gives us an idea if the trend, the dominant trend at the time, is strong or not as strong. So we'll look for a reading above 25. And it looks like right now on the Dow, or the SPX rather, we're at 21.96, and we'd want it to be 25 or higher to indicate that it's being strong. So I'm going to say it's a little bit on the weaker side of things. So we're seeing weakness on the ADX, we're seeing weakness on the RSI, which might cause us to be a little bit cautious. If we go pull up the NDX here, we'll see kind of a similar thing. We had a divergence that developed through here. Now, it didn't set an all-time high on Friday like the SPX did, but it went up fairly high, almost kind of, you could look at that and say maybe that's a double top we have going on there. If we have a double top, that might be an indication of potential market reversal, right? If we're talking about those tops, let me kind of point them out to you here. We'd be looking at this area here where it put on the all-time high, and then just recently where it went to again near that same area, 23,923-ish, okay, on the NASDAQ here. And when we see a double top, that can be something where we pay attention to and say, ooh, it might be reversing because it's a reversal pattern. And what we might be looking for on that is we would be looking for the index, bring that back here, for the index to go below its midpoint. Okay, so it's got kind of a little area here. Maybe I'll just do it with a horizontal line instead here. That maybe kind of this low point here, we might look at that and say, okay, if it breaches that midpoint area, then there could be consideration to maybe go bearish on the market, because we would be looking for it to essentially reverse at that point. Now, we don't have it yet, okay? We have an RSI that's headed up 60 and higher, which is fairly bullish. The trend strength indicated by this ADX looks like it's down there at 16 right now, 16.7. So that's saying, okay, this upward trend is getting weaker. And so we're just going to be cognizant of that. We're going to be, I'm going to say, wary and just kind of watching to see if we get follow through on price, because that'll indicate maybe how we manage some trades and what kind of trades we decide to get into. Okay, now let's go take a look at the VIX here real quick. Let's go to VIX. Oops, let's get rid of those halos in the sky. On the VIX, this is just a 3-month chart, and what I've done is I've seen a channel that it seems to be trending in. It's a downward channel, so that means the volatility index is getting a little bit weaker. If it really starts to maybe pop beyond the boundary of this upper line of kind of showing where the resistance areas might be, then we might look at that and go, oh, okay, maybe some fearfulness, maybe some jitters in the market might be starting to come on. But right now, it's mostly in these lower areas where the volatility, we're going to say, is fairly low. Now, we might see high volatility on individual stocks, but it's helpful to know, hey, are we seeing it in the markets overall? Now, I asked you, I said, I'm going to give you 3 questions you might want to ask yourself before getting into and deciding what strategy you might be thinking to look at and to trade. Okay, so question number 1 is this, and I'm going to come and copy this and paste it over in my scratch pad area. Get my mouse in the right spot here. Question number 1 is, do you feel more bullish, bearish, or neutral on the markets? You can answer me in the chat if you'd like to. I'd like you to at least answer yourself out loud so you know kind of where your thoughts are, what you are thinking, and were you looking more bullish, bearish, or neutral? Okay, we might have differing opinions on this too. Based on what we've talked about, I think we're seeing evidence that the market is still more bullish, but could be slowing down, could be priming for a reversal, but we don't have evidence of it yet. Okay, that might push us not necessarily maybe to the bearish camp, but maybe a little bit more in the neutral camp zone. Okay, Kelly says neutral, Will says neutral. Ricebird's going to tiptoe into class. I think that he's probably late, which is just fine. Okay. Greg says, yeah, I'm still short-term bullish, but I'm cautiously bullish. And you might resonate with that feeling as well. Well, if we head back to our slides and we talk about, okay, what strategies might we consider if we're on the bullish side of things? Well, we're going to be paying much more attention to these strategies over here on the far left, or possibly some neutral strategies. But really, we're probably not seeing a lot of manifestation yet for bearish strategies, but we're not going to be surprised if we start seeing some. Okay. And if somebody was saying, hey, I'm seeing some opportunities that maybe are weak and are bearish, some people might go ahead with them, right? Using maybe more conservative strategies like a long or short vertical, as opposed to maybe doing a long put, which somebody might use if they're one trying to hedge, or two, they're feeling fairly aggressive. Okay, so first question to ask yourself, am I bullish, bearish, or neutral? What are the prime strategies that I want to be looking for? Where are our thoughts as far as what the market's doing? Now, next up, the next question is, okay, when we find a stock that maybe has an entry, we want to identify, does it look like it's going to be making a big move or a small move? Okay, so let's pull up our first stock here that we're going to take a look at. And get rid of the yellow here. Let's bring up UNH. All right, United Health Group having a nice little move today. It's up a little bit over 8%. Let's get a little bit more, a better idea of maybe what's been going on with the stock for the last 9 months. You can see those moving averages had been heading down for a lot of that period of time. It hit a high point of 606, but look how low it got here just last month. Got down to 234.6. Okay, so huge haircut on that stock. Now, is it showing a reversal pattern? Okay, that might indicate some bullishness. I'm going to say some people might look at this as maybe kind of a stretch, might be an inverse head and shoulders, just because this area went a little bit lower than here. But I don't really see a shoulder developing over here on the right side. And typically for an inverse head and shoulders would want to see that. Okay, but what we are seeing is maybe we're seeing a little bit of a U bottom, where it has a few days of some consolidation down at a point, as opposed to just say like one day, and it rallies back up. So it has some sideways consolidation, and we see the 10 is above the 30 right now. So the shorter term moving average is above the lower, the more period one, right? The 30 versus the 10 is the faster moving average. That one's the slower. But it's having a nice lift today. And one thing that somebody might look for a breakout is, does it have good volume? That yellow line is average volume. This one is, man, maybe twice the average volume today. So when we see volume move in, that gives us an indication that institutions are moving in. Institutions aren't typically day traders, right? They're maybe have a longer positions that they put in. And so we'll say a breakout with volume tends to be a little bit more reliable. And if we were to draw in here, maybe where the resistance has been, well, that didn't draw for very long. Maybe something along this line about, say, 315, 316 might have been a resistance area that it broke through here today. Okay. Now, in terms of determining, do we think it could make a big move or a small move? The stock is a little expensive. The RSI is headed up, so it's saying, yeah, this stock is looking, it moved over into this overbought area today. That overbought just means buyers are in control. The strength on the ADX is now saying it's a 25.74. So it just barely made it above 25 today, letting us know the dominant trend, which at this point is turned bullish, is fairly strong. Okay. Now I'm going to come over here to this watch list. And I can't remember if UNH is on this watch list or not today. Let me scroll down to the bottom here. I guess it wasn't on this watch list. I'm going to change my watch list over to, I'm going to call it class 2, and we're just going to put UNH right here. And you can see I have showing the 1 month and 3 month calculations of the stocks that are on this list. And really, we just want to see what UNH's is. So the last 1 month, it's up 37%. Although for 3 months, it's only up 10%. Okay, so you can see, yeah, that makes sense. Maybe it's up here around, let's see, July 9th-ish, okay? And it pulls back for a ways, and then it has this big move back up. So if we were looking, it looks to be a small move or a big move, you might be a little bit torn on that, right? Might not be exactly sure, but I would say if one of these columns, the 1 month or the 3 month, suppose it's in double digits, one or the other, then we might consider them looking at making a fairly strong move. Okay, if we were to annualize a 1 month return that's at 37%, we might expect a big move out of that stock. We've seen the history, we've seen it put in a little bit of a base, and maybe it's reversing now. And does it have some upside? Oh my heck, look at this upside. It was up at $606, and right now it's at 347. Yeah, there very well could be some good upside here. Okay. Let's do this. I'm going to collapse that watch list. I just wanted to kind of show you that calculation. If any of you need those calculations because you don't have the 1 month or 3 month, tell me. I think most of you probably do at this point. But if somebody needs it, let me know and I'll paste it out into the chat. Let's see here, Riceberg. Okay, so looking at some of you answering that question a little bit more, we had a couple more bullish ones come in here. Now, Riceberg said he tiptoed into to a calendar a few days ago, and I'm wondering, is that on UNH? You did a calendar on UNH? That'll be interesting to see. Kelly says it's into its last gap down, and what I think you're saying, Kelly, is that it's filling this gap, right? Many times gaps get filled. They don't have to. That's a rumor. It's a very famous stock rumor. But I think what Kelly's noticing here is there was a gap from here to here on this gap down, and it looks like maybe it's starting to fill it as well. Okay, so maybe an additional reason for it to go up. Now let's go over the trade tab. And let's see what we might have available. Traded, oh, this is not the right stock. Let's get the right stock in here. Let's get our UNH. All right, it traded 45 million shares today, so not too shabby. Has some weeklies that are available for us. What do you think of implied volatility over here? For my question 2, let me copy that over. Do we expect a big move or a small move out of the stock? You can just answer that question. Again, tell your dog or your computer screen or chat it in. If you think maybe UNH, what it's showing recently, that maybe it might be more conducive to a big move or a small move. Okay, I told you what I thought as far as looking at the 10 or the 1 month and the 3 months. If something's in double digits, maybe we look for a bigger move. Okay. If we look at implied volatility here, would you say it's high, low, or medium? Okay, we're looking at the implied volatility priced into these contracts. You know, typically many traders, they'll use this as a gauge. You don't have to, you can create your own scale. But many traders will say anything over 35% is probably higher volatility. Now, I wouldn't say this is super high. We're going to take a look at another stock that has much higher implied volatility priced into the options. So I would say these are falling into high volatility, but not extreme. Okay. And that might lead us to decide, well, do we want to do a buying sell strategy or a selling strategy? And I want you guys to answer here in the chat. Would you favor, based on implied volatility, would you favor a buying strategy or a selling strategy? And that's going to be our third question that we're going to examine out here. We're doing a buy or a sell. So go ahead, chat it into me, or tell your computer screen or your dog, or if you have a cat. I'm partial to cats right now. You know, if you have a cat, you could tell your cat. Okay. Greg says maybe sell because of the higher volatility. That's what we might infer there. I would say, especially if it's super high, somebody might say, yeah, let's be a seller. Let's do a strategy, maybe a short call vertical or a short put vertical, depending on if we're bullish or bearish. This one we've already decided. It's really pointing to some bullishness. Okay. Ricebird said, I'd do a buy on UNH to limit risk. Okay. Michelle likes a buy. Euro likes a buy. Will likes a buy. You guys are all on the buy side. Okay, let's go look at the buy side of things here. Of course, I did some looking before, right? I pick out what strikes and what months that I think we might work well with here. And we're going to use the October 3 expirations that have 24 days left. Now, let me give you a couple of trains of thought here. One, you got to have enough open interest and volume to make sure that you can do a weekly. Some stocks, even though they trade weeklies, they're not widely traded. They're just have a small number of contracts, but these have a relatively healthy amount of contracts, especially if we were going to do a long call vertical. Okay. If you were a little bit uncomfortable with 24 days, then you might decide to go out to the Octobers that expire on the 17th. These have a lot of open interest here as well. 20 to 40 days is a typical window that people might decide to use verticals in, whether they're buying or selling. Okay. Looking here, we've got, oh man, look at the volume on this today. 1,800 contracts here, 1,100 contracts here. We're going to look at what might be at the money right now. We're going to look at 345, 350. And we're going to say buy vertical, it's going to be a $5 wide spread. And right now it would cost us about $238, which is similar to what I was seeing earlier. It's actually gone up in price a little bit more, so the stock must have leapt up or creeped up a little bit more as we got towards the close of the day. So on this one, we'd be risking $238, and in our account, in this particular class, we can risk up to $1,500 per trade. Well, if we want to do that, let's do a little bit of math here. Okay. First of all, we've got to know, well, what is our max theoretical gain? We know our max theoretical is 238. It's whatever the net debit is here. And so let's take 5 minus 2.38. That's going to give us a value of 362. That's what we have to gain on this trade. So we're willing to risk 238 to gain, what was that, 263? We'll come back here, calculator. You clicked off too quickly for me. 262. Now, if we were to do the math on that, we're looking at more than 100% return. So we're looking at something, I'm going to say, aggressive in the as far as the return percent. But let's look at the chart and see, does it look like a big move for UNH to go from 347.92 to 350? That's going to be about what, $2.33-ish, 34 cents. Okay, let's kind of let me give this a little bit more space now. We'll consult the RSI, we'll consult the ADX, but I'm going to kind of shrink them down here a little bit. So we have more definition. I can get that to adjust. That's being a little weird here. There we go. And let's zoom in here. 350, where is 350? Well, this says 360 out here. This stock actually went, the high here was 351.71. So we're only asking it to go below the top of the shadow on this candle. That's where we would feel comfortable for it to go. Does that look like a big ask of the stock? You know, answer that to yourself. Is that a big ask of this stock to maybe move in the next 24 days to the top of even the shadow, the very top of the shadow. Not really a big risk, not really a big ask of the stock. Okay. So what will our probabilities look like? Well, let's just take a look. All right. The one that we'd be selling here would be the 350. We don't need it to move a ton. And if we were looking at the probability of this thing expiring out of the money, about 53%, which means about 47% of expiring in the money, which really isn't high probability, but it doesn't look like a big ask for the stock. Okay. So let's go ahead with this. We've decided we're going to do a buy strategy, and it could do a big move or a small move. We wouldn't mind a big move. Okay. And if it does make a big move, that might encourage somebody to use more of a buying strategy, looking for something a little bit more aggressive than a selling strategies that a lot of the times will set those up a little bit more conservative. Okay. So let's grab our calculator again. Let's run some numbers. $1,500 is what we can risk on the trade, and we are going to be risking $238 per series of contracts that we do, so we can do 6 contracts. So let's queue that up. Let's do a first trigger sequential, and let's create an opposite order here. And let's put an order in here to buy it back when it gets a chunk of the gain. When it gets a chunk, and sometimes I'll use 60 or 65 or 70 or 75 or 80 or 85, representing a majority, and you'll come up with a number you're comfortable with, and it might vary from trade to trade. On here, something I'll do frequently in our class is just 70%. If we can get 70% of our max theoretical gain, which this was 2.62. 2.62 is our max theoretical gain. Let's multiply that by 0.7. That's going to give us $1.83. So $1.83, let's add that to 238. And that gives us a value of 421. So we're just going to say, hey, we get that 70%. Let's not dink around. Let's go ahead. Let's buy it back. Let automation take care of it for us. We're going to see in some of our orders of trades we're going to follow up on that they executed for us because the order was sitting there versus kind of watching it, thinking you're going to catch it because you're like, oh, I'm looking at the markets all day long, or I look at it for half the day, or whatever the scenario is for you. You don't have to try to catch it. We'll put it out there and say, hey, go grab this for us if this condition occurs. Many people don't like to put stops on verticals. You could if you wanted to. We've looked at that in other times. Okay. Let's see. Bharat says we did a UNH long call vertical on October 17, 330, 340 in James' class this morning. Yeah, that's another possibility if you're a little bit more comfortable going out a little bit further and having a little bit wider strikes, because these would be $10 apart versus $5. It increases your risk, but quite honestly, we're kind of looking at the same move in the stock. This would give it a little bit more time to make that move. All right. The trader says, isn't it better to check the IV percentile? We could do that, okay, and see if it's falling in a range where it's been recently or not. Let's tell people what that's about. I'm not going to say that it's better to, but it certainly is a piece of information you can consult. And in our limited time, there will be times that I'll focus on certain things and not necessarily delve down into the statistics here. But I think what you're looking at here is we're seeing the current IV percentile rank is at 40%. So that's letting us know that actually implied volatility maybe is a little bit on the lower side of where it has been. You know, if it's in the 40th percentile, then there's, 60-ish percentiles higher than it where the implied volatility has been higher. And probably in the period of time where the stock was selling off, yeah, implied volatility was probably quite a bit higher over this period of time. That wouldn't surprise me one bit. Okay. LaTrader, a good thing to consult. Absolutely. Nothing wrong with consulting it. All right. Next up. All right, we're going to do go through our three. Well, we've already determined we're on a little bit more on the bullish side here. But question 2, let's look at this next stock and see if we think it could make a big move or a small move. It's APLD. This is a technology stock, Applied Digital Corp. And fairly recently, it had been a lower price stock. It got above $10, so it starts coming in some of our scans that we'll do now that it's a little bit higher price than what it had been earlier in the year. And we can see there was some decent resistance here, about 15 and some change. Looked like it broke through it here. Kind of has waffled a little bit, though, hasn't it? It stayed above it for a while, but then it came back down below. But look, it only got down to just a little bit below the 30-period moving average, which isn't really all that low. What kind of an entry signal is it giving us here today? We actually have closed, so we can say definitely we have a close above the high of the low day. Previous trade, we had a breakout entry. This is a hold entry. Some of you are familiar with it. Some people might trade it during the day if they see it move or trade above the high of the low candle day. Okay, so this one we're going to say, okay, it's a hold. Trend is at 28, or ADX is at 28, which means trend strength is strong because it's above 25. RSI is headed up, which is more bullish, and it's above 50. And anytime it kind of gets above 50, then then we'll say, yeah, it's a little bit more bullish versus bearish. Okay. All right. Let's see big move or small move. We're going to throw this stock into this is just our list that we can throw information in so we can see. So in the last month, this stock has moved about 8%. Over the last 3 months, it's moved about 35%. So then ask yourself, do you think then it's due for a big move or a small move? Is it likely to give us? Of course, we never know. But say, for example, something like a stock that's just sitting here on the list. Say like this Bros, which I think is Dutch Brothers. If they're down 2.73 in the month and down 3.67 over 3 months, we probably wouldn't expect a big move here, right? These are really small numbers. Our expectation can be driven a lot by how high are these numbers? And like I said, if one of these is in double digits, we might expect a bigger move. Okay. Now let's go over and talk about what strategy we might use and what implied volatility looks like. Look at these numbers over here. We've got 107, 95, 86, 87, 98, 106. Okay, I'm going to call these very high. I don't know what it is in your book, but I'm going to call it very high, which might lead us to more of a selling strategy, but you don't have to do a selling strategy. But let's look at some of these numbers here. On this one, we are going to use the October 3s again, okay, the weeklies, because we've got a lot of open interest here. When it's in the hundreds and we are going to probably do single-digit contracts, yeah, then we're probably seeing plenty of open interest there, okay? So, yeah, that IV is really high. Yeah, Ricebird says, wowzer. Yeah. Greg says, maybe we could sell a short put vertical. Okay. Now, I played with some different strike prices here. And this is what's interesting on this one. We've got 50-cent increments. Okay. So it makes it a little easier for you to get maybe the strike prices you want. On this one, we have a couple of choices. We can be more conservative or more aggressive. I think we should do the one that maybe is a little bit more aggressive and take advantage of this high implied volatility, take advantage of the idea that, hey, we could sell some premium here and possibly structure a trade that could give us a decent return. So let's see what these numbers roll out like right now. We're going to go with, let's see here. We're going to go with this 14 delta or 14 strike price. It has a delta of 29. Currently, probability of expiring out of the money, 62%. Typically 60 or higher is where we consider it higher probability. And we're going to spread this out by $1. Okay, so we're going to do a 14.13. We're going to adjust this here. And this is saying right now about a 32 cent max gain. And if we go to our calculator and we run our numbers and we say, okay, what is 0.32 or max gain divided by what? This should be 0.68, right? Would give us about a 47% return. So you're like, well, that's kind of nice. And it's only in 24 days, right? So it's a shorter period of time. It's a fairly higher return. Doesn't mean you have to. If somebody wanted to, and I ran the numbers for this as well, if you wanted to be a little bit more conservative, you could sell, either the 14.50 or the 15 and bring it to a return maybe that you're familiar with. Maybe it's a 30-something return while still having a pretty high probability of expiring out of the money. Okay, so somebody could do that as well. But let's go with this one. We're going to go with the 14.13. If our max theoretical loss here is 68, let's see how many contracts we can do. Make sure that is enough that you feel comfortable with it, all right? So let's clear that out. So we'll go 1,500 divided by 68. It's going to give us a fairly decent number of contracts we could do. Comes up with 22. Now, some of you are like, man, I've never traded 22 contracts at once. That's a lot. Okay, that might be the case. You might not feel comfortable there. You'd maybe go half that. You'd do 11 or 10 contracts. One of the keys here is we don't want to make up a big percentage of what the open interest is. So we'll look for, say, we don't want to be more than, say, 5% of what the open interest is. Now, today, it actually had more volume than open interest. So this value here is likely by tomorrow morning when they update the numbers. Open interest might be here somewhere in the 800s, and then it'll start over with the volume. Okay, so on that that we're looking to sell there, let's say it's 800 something, and we're doing 22 contracts. That's a really small percentage, right? We could run that number here real quick. If we said, we'll just say 800. It's probably, we don't know exactly what it'll be, but something in that ballpark. And if we divide that by number that we might want to do, which is 22. I didn't do that the right way. Let's go 22 contracts divided by 800. We're making up 2%, almost 3% of the open interest. Is that less than 5%? Yeah. Right. So ours are a little bit bigger fish, or little fish in a big pond. Now, that is a high number of contracts, so you will have more fees. Somebody in that case, they might say, well, let's spread it out by $1.50, and you certainly could, right? Bring it a little bit bigger credit and maybe do fewer contracts. You can run the numbers both ways and exactly fill in the commissions in there, what you're going to be paying for them, because that is part of the decision making. Okay, so we're going to count on that. Let's kind of clean things up here. And let's go ahead and do 22 contracts because our account can afford it. So we're going to. And again, we're going to put in a first trigger sequential, put in an opposite order here. And this opposite order, let's do the same thing. If we get 70% of our 32 cents, let's take the profits and get out of Dodge. Okay. We don't want to bleed every little last penny out of a trade. And we're going to look at an example here in a minute that maybe illustrates that a little bit more cleanly if that's a new concept to you. Okay. So if we have 0.32 times, if we get 70% of it, only 30% is left. That says go buy it back at 9 cents. So we're going to put in 9 cents here. We're going to make it good till canceled. We're going to send it out there. And I forgot to send this to our option strategies bucket, but I'll send it out to our group of trades that we're working on right now. All right. If we have time, we'll look at another trade. I'll just kind of show you what the stock chart looks at, and maybe this can be your homework assignment, is ask yourself the 3 questions again. Are you bullish or bearish? Probably stick with bullish. Big move or small move? on this particular stock. We've got another little hold type scenario here. We've got a 4-day pullback and a pop here. And it looks kind of maybe like it could even be a bounce off the 10-day. There's a lot of different things that it might qualify for as an entry. Now, it is a little bit trickier because it's up 15%. And so that might be a consideration. All right, let's take a look at our trades that we need to take a quick look at. Number one, we're going to go to the account statement and we're going to put in MSTR. On MSTR, we did a calendar. We did a put calendar. We bought it. We got in for $5. And I want to show you the technical setup and I want to show you how it got filled. It got filled based on the idea that we went in and changed it last week and said, all right, if the price of the stock gets to 320, which is our short strike price, where our max peak is, get us out of the trade. If you even do that, get us out. We don't even know what it is, but we know that's where peak profitability might be. So over here to the chart, let's zoom in here. This is where we got in. It kind of went sideways a little bit. We needed it to go down to 320. And boom, the first day it did, it got us out of the trade. And we made a pretty decent return on it. You saw there, we had a 910 we bought it back for. So we made $4.10 on the contracts here, which is a pretty decent return. Let's see if I calculated what it was going to be. Yeah, I calculated it. It was about an 82% return. So not too shabby for not even quite 2 weeks. Okay. Now, as we come over here, I want to talk about managing an iron condor. We've got 3 of them on here. We've got Apple, Goldman Sachs, and GE. GE and Apple, they're just kind of floating along. They're just doing okay. We're going to continue to let them work. They have 10 days before options expiration. So we're going to want to keep an eye on them, see if we can wrap things up this week. And we might do it all together as one spread, or we might do it individually. I wanted to talk about Goldman Sachs because on this particular trade, we're down a little bit because it's kind of worked its way up a little bit. It's putting pressure on our bearish side. So let's look at the chart here on Goldman. And let's kind of zoom in here. We are short the 770 and the 690. So our 690 is where really the profits are being made right now. The 770 is the one that's under pressure. All right. Now, it still could work out just fine on that side. But some of you might be feeling like, oh, there's pressure. Should I get rid of it? You don't need to. We still have a little bit of time to work with here. But one thing we might consider doing is wrapping up on the winning side. Maybe trying to take profits out of the short put vertical side. So if we go back to the monitor tab here and we say create a closing order, you're going to get a lot of choices. We're going to go find the one that is for just the put spread. And if we wanted to buy it back right now, we could buy it back for 11 cents on that spread where I'm trying to see what it did here. We brought in a credit of 79 cents on that part of the premium. So we could go buy it back for 11 cents. And if we wanted to lock that in, that's about 88% of that part of the spread. Now, if somebody wanted to do that today, they certainly could. We could also say, well, maybe let's milk another day or two off of it. Maybe let's see if it continues to drift. Maybe we can get a few more cents out of it. We're not going to go for a ton here, but what if we could buy it back for 7 cents? Okay. Maybe bring in a little bit more money. We got 4 contracts there, and let's put it good till canceled. And we're going to try to manage the winning side of that trade. At the same time, we are going to be watching for if it really breaches above here. There was a lot of volume here today. Go out and check the news on this stock. They had a favorable thing happen that I think could continue to propel them. out of this sideways range they were stuck in. And if it has a big move tomorrow, we're going to have to take some action on it. Okay. So that's what we're looking at here. Okay. So as you're practicing iron condors, because we did a couple of practice iron condors trade, I hope you're trading some of these trades in your paper money account along with me, because that's how you're really going to, in this case, feel the pressure of the stock moving up and crowding out, our 770, 775 short call spread. That's where you start feeling the pressure. I kind of want you to feel that so that how do we manage it when this kind of a scenario comes along. Okay, so I'm going to keep my eye on that. We're going to let the other two iron condors do their work, but hopefully by the end of the week, I'm hoping to be wrapped up on them. All right. Very good. Well, this is the last class of the day, as you know. I appreciate you being here. We didn't have too much work that we made Cameron do. He didn't sweat too bad, but Cameron, thanks for your help here. I did not see a survey out here, but if this was helpful for you today, go ahead and hit the thumbs up button on your way out. Make sure you follow us on X, Connie Hill CS, Cameron May CS. Follow us and subscribe to our Trader Talks channel so you can find our content really easily. Most of you are probably subscribers at this point, but new people join us all the time. We want them to know how to easily find our content. All right, you guys have a great evening. We'll be back tomorrow morning, bright and fresh, with, I believe tomorrow is going to be Trading Futures with Ben Watson, right at 9:30 Eastern, right at the opening bell. Thank you so much. We'll see you then. Bye-bye.